A common question that gets asked a lot: my significant other and I are planning to buy a home together, but the mortgage will only be in his or her name. How can I protect my investment? So you're planning on purchasing a home with your significant other, but you are not legally married. Is this a good idea? How can you protect yourself in the case of the "what if we break up" scenario? Now would definitely be the time to be having these conversations, especially before you get too deep into the mortgage process, and I'm glad to see that you and your significant other are here looking into this. Buying a home with someone you're not married to can have particular risks, given the exact scenario of breaking up and wondering how to handle the property. When we buy a home with a spouse, there's a certain degree of comfort we can take knowing that in the event of a divorce, there will be a clear and legal channel to untangle the financial relationship. A judge or mediator can decide who keeps the house or how much of the proceeds from its sale go to each person. But if you break up with an unmarried partner, or if the relationship with a friend or family member sours, there really isn't a clear-cut legal channel to hash out these issues. However, there are a number of steps you can take to protect yourself and your financial investment in this home. To start, just because the mortgage won't be in both of your names doesn't mean that the title or deed to the home cannot be. Sometimes even married couples will choose to purchase the home together but only put one person's name on the mortgage. After all, one spouse could have a much better credit or much worse credit score than the other, and a steadier stream of income or less existing debt. All of these factors that can then help them lock in a better interest rate or more attractive terms. The mortgage lender typically has to sign off on both of you not being on the mortgage. Sometimes they'll require that both people appear on the mortgage itself, but then only one will be on the note, which is the declaration that you promise to pay back the loan. For the non-borrowing co-owner of the home, it is important to know, should your significant other fail to make on-time mortgage payments, the bank will still have recourse to sell the home to get repaid. If both your names are on the title of the home, then both of you own it, regardless of who's on the mortgage. A mortgage lender could block attempts to add a person to a home's title after the fact, so that's why it's important to square things away from the very start. How your names are listed on the deed can have implications for what happens if one of you dies, but that's a separate issue. After determining the best route for you to take in terms of the home's title and mortgage, you should also consider drawing up a cohabitation or co-ownership agreement in advance of purchasing the home. Many couples are reluctant to discuss the "what if we break up" scenario. However, it is vitally important for non-married co-owners or cohabitants of real estate property to have a written agreement in place to protect themselves. The written agreement can spell out how the property would be divided in the event that you both choose to break up with one another, and you could specify that each would retain the amount used for the down payment if the home were later sold. A document like this would hopefully prevent a legal fight from ensuing if this unfortunate scenario were ever to arise. So go ahead and hire that attorney to walk you through this and protect yourself in case of the "what if we break up" scenario.